Very good morning, friends. Today we have to study the sources of finance part 4th. It means that in last few periods we have studied the sources of finance part 3rd, part 2nd and part 1st. It means the three parts we have studied in the last periods. Okay. And now in this period we have to study the sources of finance part 4th. In this part we have to understand, we have to study the concept of term loans. Okay. A loan from the bank. What is the meaning of term loan? A loan from a bank for a specific amount having specific repayment schedule and fixed rate of interest is called term loan. It means that you have to understand the specific amount is also there, specific repayment is also there, specific schedule is also there, and fixed rate of interest is also there. These things are important in case of term loans. Term loans normally mature between 1 to 10 years. Try to understand what is the period is here. 1 to 10 year. It is the standard commercial loan and used for major investment in business. The repayment schedule. The repayment schedule may be with monthly or quarterly repayment. The repayment schedule with maybe monthly or quarterly repayment with maturity date. It may be either medium term or long term. Medium term means 1 to 5 years and long term means 5 to 10 or 15 years. In this way, such type of a term loan is also available. Now, we have to study the different types of the characteristics of term loans. It means distinguishing characteristics of term loans we have to study. What are the characteristics of the term loan? There are how many characteristics I have mentioned here? I have mentioned here 1 plus half dozen characteristics. How many characteristics are there? 1 plus half dozen means 6 plus 1, 7 characteristics I have mentioned here. First characteristic is there, objective. What is it? Objective. The term loans are granted either for establishment. It means that particular objective is there for issuing the term loans. What are the objectives? First objective is there for establishment, renovation, expansion or modernization of business. Term loan is issued. Then another objective is also there for meeting the requirements of core working capital. This is the second objective of the term loan. And the third objective we have to study here for retiring or redeeming bonds or preference shares in order to reduce the burden. These are three objectives for borrowing term loans. Okay. Then second characteristic we have to understand, that is the security. Term loans are normally secured. Don't forget. Term loans are normally secured. They have either a fixed or floating charge on the assets or on the property of the company. The lending bank prefers to have first charge on the asset of the company. Try to understand. That is secured loan. That's why, what is the second feature? What is the second characteristic? Security is the second characteristic of term loan. Then third characteristic we have to study. What is it? Agreement. The term loan is granted. The term loan is granted on the basis of formal agreement. Try to understand. It contains the terms and conditions of loan and also some clauses for the protection of the bank. The terms are settled through direct negotiation between the bank and borrowing company. That's why term loans is nothing but an agreement, and that is also the another characteristic of the term loan. Next characteristic we have to understand, that is a time period. The term loans are given for a period ranging from 1 to 15 years. Already I have told you at the time of the definition or meaning also. Such type of loans are given for a period of ranging from 1 to 15 years. The repayment schedule and the installments are fixed in advance. The project and the capacity of borrowers to repay is taken into consideration. Usually, repayment starts after 2 to 3 years from the date of sanction. Some penalty is imposed in case of default in repayment. That is also another characteristic of term loan. Then another characteristic we have to study, that is basis of participation. What is it? Basis of participation. If the term loan is very big or substantial, try to understand. If the term loan is very big or substantial, various financial institutions may participate in it. They will pay their share and enter into joint agreement with the borrowers. Such participation may be for sharing the risk or statutory regulation. If the loan is greater, there is more participation. It means that greater the loan, more the participation. This equation you should have to keep in mind. Okay, and this is the another distinguished characteristic of the term loan. Then next characteristic I have mentioned here, loan for various projects. Loan from variable projects also there. The leading institutions grant term loan only if they are satisfied with the project. Try to understand. If they are satisfied with the project, such type of term loan is also granted. Such agreement you have to understand. Such agreement is also there. Then only they go ahead with the term loan. The borrowers has to prepare and submit a projected cash flow. Borrower has to prepare and submit a projected cash flow and cash flow statement to the bank. It means that loan for variable projects is also available, and that is also the another characteristic of the term loan. Then next characteristic we have to study, that is certain conditions. What is it? Certain conditions, and different types of the conditions are also there, and due to those conditions term loans are given there. The loans are given as per the written agreement. Don't forget, loans are given as per the written agreement. Such agreement provides for the certain conditions or safeguards for the protection of the lending institution. The borrower is required to give undertaking. Borrower is required to give undertaking as follows. It means that there are conditions you will find. What type of undertakings are required there? Number one, no further loan will be taken against the security. Next, cash flow will be properly maintained. Next, the debt equity ratio will be maintained as per the norms. Next, the dividend shall not exceed the agreed rate. Next, the loans will become repayable before maturity if agreement is violated. Then another condition is also there. Financial and other information will be supplied regularly and when desired. म्हणजे company should provide such type of financial and other information to the such type of loan givers. Okay, such type of the loan issuers also, and such type of information should be provided. Then another condition is also there. The directors will furnish personal guarantee. Try to understand. The directors will furnish personal guarantee for repayment of the loan in case of default by the company. If company made any type of default, at that time directors should have to give personal guarantee for the repayment of the loan. Okay, that is also the condition. These are the conditions. Now there are two main sources of term loans. What are the main sources of term loans? Those sources also we have to understand. Those sources are there. First, specialized financial institutions. From those institutions also term loans can be given, or development banks. And the second source is also there, commercial banks. However, financial institutions play a major role in granting the term loans to the business units. Try to understand. In this way, these are the different types of the characteristics of term loans. How many characteristics are there? 7 characteristics I have mentioned in this chart. First, objective. Second, security. Third, agreement. Fourth, time period. Fifth, basis of participation. Sixth, loans for variable projects. And the last, certain conditions. In this way, these characteristics also you should have to study, you should have to understand in detail as a student of business finance. Now, we have to understand what are the merits of term loans. Those merits also I have mentioned in simple word. How many merits are there? 4 merits are there of the term loans. First is there, the cost of term loan is lower than equity and preference capital. The cost of term loan is lower than equity and preference capital. This is the first merit of the term loan. Second merit is there, the term loan do not result in dilution of control. This is also the another merit. It means that control cannot be diluted, and control is not diluted. That's why such type of a loan is also possible. Then another merit is also there. Term loans are backed by security. Try to understand. Term loans are backed by the security which the lender prefers. This type of merit also you'll find in case of term loans. And the last merit is also there. Terms of agreement can be revised. Terms of agreement can be revised, and there is a less issuing cost. Less issuing cost, that is also most important aspect. And agreement can be revised wherever and whenever want. In this way, these are the 4 merits of term loans. How many merits are there? 4 merits are there of the term loans. This is the one side of the coin we have studied, and the second side of the coin also we have to understand what are the demerits of the term loans. And those demerits of the term loans also we have to understand. Typological mistake is also there. Debenture, not a debenture but a term loans. Okay, please, extremely sorry. The term loans first demerit is there. Term loans do not give voting rights. Term loans do not give voting rights. Second, they do not represent negotiable securities. Term loans do not represent negotiable securities. And the third, term loans. About the term loans, repayment of interest is compulsory. And the last, it creates charge on the assets of the company. In this way, these are the demerits of the term loans. And also references I have given here. One book I have referred there, that is the Chaudhary Mankor Shinde. That book is entitled as Business Finance, published by Phadke Prakashan, Kolhapur, 416012. In this way, this point is also over. And if any difficulty will be there, any shanka will be there in your mind, you can ask me. Definitely I will solve it. I will try to solve it wherever and whenever it is possible. Okay, thank you very much.